This podcast is brought to you by the award-winning prop firm, Fidelcrest.
I'm a strong believer of reading the markets and looking at price action. Price is absolute king to me. So if I can see something there, and I can see people joke about patterns, and I do at times, but there are certain things that you see there and you see it enough and you think, oh yeah, and then you probably find out that it is a pattern that's well known and recognized. I've never found it before, but I've just recognized it, but I guess, or subconsciously it's there anyway. I take what's on the table effectively. I use pivot analysis a lot, which I will show you. So I'll take what's there, not what I want to have, basically, in a sense. I'd like them all to be 10-1. But the reality of these markets is, as long as you can cover your costs and your strategy has a bullish bias, you can make money. Again, it's a strong belief I have. You count in pips and you mislead everyone by saying, well, the system's done 1,000 pips. And realistically, it's probably done 4% because the amount of risk that you put on the other side of those, what you gained was just didn't make sense. He was just a blinking good trader. And the only reason he was a good trader is because he read price. However it was, he would look at price and he read price. He wasn't using all this market matrix stuff. He was actually just reading the price because he'd always have an excuse of why he's just done this and why he's done that. And all he was doing is reading the price. And the moral of the story is just learn how to read price. And I can show you how to trade literally without anything else but price. And I do this at any time. I don't care. People can come into my room free of charge for a day or two and I'll show them how to read price. You can see how you could make money just by reading price action. Put pivots on there in price and it's an absolute dream for me. I know the stats behind the pivots and I can see the price action and all of a sudden I've got an edge in that market. I know that edge is going to work a good percentage of the time, and a good percentage may be 60-65%.
Episode 215. What's up, traders? We've got Kim Watson here on the show today. Now, Kim's a very experienced trader from the UK who's been around for a number of years, and he's already told you what it takes to make it as a trader. You really need to know how to read price. Well, the best traders read price. Now, you're going to find out how he reads price in today's show, as well as the video we shot afterwards. So make sure you don't miss that. Other things going on here at Trading Up, we've got that live stream opportunity. If you do want to jump on the Trading Up live stream and take part in a 50K challenge where you can win $1,000 at the end of it, then jump over there onto the live streams or links under the video or in the podcast description and take on that Fidelcrest challenge. Now, talking about Fidelcrest, let's hear from my sponsor and get on with the show. Fidelcrest is an award-winning prop firm that funds traders with up to $2 million and offers generous profit splits up to 90%. So one thing that really sets Fidelcrest apart is their no minimum trading days requirement on their challenge and verification stages. On top of that, traders who successfully pass the challenge and verification stages are eligible to receive a bonus payout of up to $30K on top of their funded stage profit split payout on performance. And be sure to use promo code TradingNut, all one word, to get 10% off your next challenge. Click the link in the description below or the card above to find out more. All right, folks, here we are on Trading Up. We've got Kim Watson in the house from the Pivot Trader. Fun fact, we actually interviewed Kim's business partner from years ago, back in 2018, Charlie, and I believe both of you guys are actually, funnily enough, into karate. Is that right?
Well, he's given up, but I'm still doing it. Yeah, I've been doing it for 40 years now. So
wow, 40 years, unbelievable.
I know I don't look that old, but that is just around about 40 years this year, actually.
Cool. Now, it's not just that, but you are also a professional trader. You do swing trading, Forex markets. You didn't start off there. So let's start by hearing your long trading journey. And I believe it is quite long. You've been doing it for a long time.
I have, yes. I mean, it started way back. I got into the idea of trading. It sort of came to me gradually. Firstly, we had Margaret Thatcher in power and she was selling off a lot of the companies like BT and British Gas and things like this. So everyone said buy the shares, they'll do pretty good. So I bought the shares. So I got into sort of buying some shares and some of them just doubled overnight almost. The demand for them was so great. As soon as they hit the market, there were people trying to buy them. And it was a great start to trading. The next sort of stage of that was when I was working at a company that then started offering these buyers or owners you earn schemes, where you would be offered the option to buy the shares at a certain price. Like it's £1.20 the first lot I bought, and in 5 years' time you can sell them for the price you opted to buy them at, and they were £5.60 or something like this.
Yeah.
So every year I was adding to them, and they didn't all increase as well as that. But that was the first lot I bought, and I thought, hey, this is something in this. And I then got promoted and ended up with the executive share option schemes and things like this. And suddenly you're sort of getting a bonus for doing absolutely not a lot, really. But that sort of got me into it. And then, of course, I picked up the usual habit of what we do is you hear someone down the pub talking about a particular share and they say, don't tell anyone, but you think, they're going to have a look at that. And I bought some real duffers. One of them was Dragon Oil. It turned out it gave me a return of 5% per year return when I eventually sold it, because I just hung on and forgot about it. So it's a bit of luck, really. But oil prices obviously eventually started going up, and it had some value. But it was just a duffer, and it's a real learn not to listen to anyone down the pub, really. Then I started, and we went on a course actually, and it was run by Tony Robbins' organization, and it was all on shares and options, basically looking at covered calls, where you buy the share, you sell the option, the call option away, and if the certain things meet the criteria at the end of the period, you either have the shares called away from you, or you stay with the shares and you just earn the money from selling the option. So did that for quite a while. Then 2000 came along, and it really sort of, when the market started going a bit sort of wrong there with the dot-com crash, etc., it really devalued the value of options. You couldn't make so much money on the options. And I sort of started then scratching around looking, and I was feeling quite successful. We started then just trading pure options. We were literally buying put contracts or call contracts on different companies. So we were really, I was really over leveraging as well. And it sort of, there was some major, there were times when you just think you're a trading god because everything's going well for you. And it turned out I was probably just very lucky to start with, because then you hit the sort of, that's got, you just wiped away half the money you've made or more, you're sort of right back down to scratch, it seems. So I then sort of got into trading better with some technique and looking at money management rules. Eventually came, and then sort of looked at. I quite like the idea of forex, because it's a market that works particularly well through the London sessions. Through our sessions, it's got loads and loads of benefits. There's obviously loads of problems with it for some people as well, but overall, if you trade it well, it's got some real opportunities. So I got into the forex market, and started trading that. Now, at that stage, I'd left work. I sort of decided this was for me. Before that, I was working for a healthcare company actually over here, and I'd got headhunted by another healthcare company which I didn't like so much, and I had loads and loads of time at home, so I'd already started setting myself up to trade. But I was just the typical bloke that wants to trade, basically, in real terms, when I started off, and that's where I came from. I didn't have any of these sort of. I knew a lot about shares. I've done an MBA, so it's sort of I knew about businesses and things like this and the principles behind it. So that was all, knew that sort of stuff. But I liked the idea that you could carry on expanding your knowledge. You could earn some money if you got it right, and so that was sort of the sort of starting point. And from there, really, it just grew. I learned. I'm forever learning. You mentioned karate. You're always learning. Trading is no different. I mean, even to this day, I might see something. I think I might give that a try. You just pick things up. I'm a strong believer of reading the markets and looking at price action. Price is absolute king to me. So if I can see something there, and I can see, people joke about patterns, and I do at times, but there are certain things that you see there, and you see it enough, and you pick up and you think, oh yeah, and then you probably find out that it is a pattern that's well known and recognized. I've never found it before, but I've just recognized it, but I guess, or subconsciously. It's there anyway, but either way. So I'm always learning. I day in, day out, I'm learning. I'm testing strategies. I genuinely believe, and I've always done this, is the biggest problem traders have is their mindset and how they trade. but they never take it seriously. They never treat it as a business in the first place. And there's very few businesses that you would start up and just guess at because some bloke sort of taught you on a course or whatever else, this is how it does it. But for some reason we do with trading because of the greed and everything else that comes with it. And the desire to, a lot of escapism for people. They think they'll earn their money and they won't have to ever work again or whatever else. So I've gone through all those sort of things. And I found the best way to do things was to test them, always test them, do the hard work. It's not about just sitting there and someone's going to teach you or you're going to find a strategy. You've got to test it because in the mindset that traders have a problem with, part of it is the belief in whether whatever they're using is going to work and get to their targets. But if you've tested it manually, and I'm a strong believer of manual testing as well, if you've tested it yourself and you've manually gone back there, you'll recognize the price, your action when it's doing certain things, and it just sort of picks it up. So when it comes to real time, you're used to that. And the great thing about technology nowadays, you can roll the screen. I mean, when I started back in pre-2000, I used to ring up almost. It was a case, shares, the shares I bought, I rang up to buy the shares. The technology wasn't anywhere near where we are now. I remember options trading. I was lucky enough to get into the Chicago Board of Options. It wasn't, well, I went there as well, but I went into the S&P pits. And there was this guy standing over the back of the pits. And I asked the guy that had taken us in there, what's that fellow doing over there? And he said, oh, he's dealing with the options. And he was on a little PDA sort of thing in his hands. And it took it to the phone and it went backwards and forwards. And I thought, no wonder my trades take so long to set up. I mean, nowadays it's just like this. But it just, oh my goodness, Anyway, wow. Sorry, I've probably over-answered your question, but that was my sort of journey into trading. And I've got a real thing with probability. I think, as I say, the trader mindset should have some probability tied in behind it to help it, because we can do a lot of things to help all the traits that people struggle with.
And what do you do? I mean, you haven't quite touched on what you're doing now. So what are you doing in the here and now?
Okay, so now I just sort of progressed. I've now I run a relatively modest business, the Pivot Trader. There, the aim is to trade in the mornings with the guys, because I personally find I've got a window of opportunity between about 8 and 10 o'clock London time, and I'll trade that time as my first opportunity, then probably 12 to about 3. And again, it's all by analysis that I've worked out that when I was taking trades before 8 o'clock, the probability of them weren't very good. There was a lot of false breakouts, etc. Anyway, so my trading day is that. So I share that time with the guys that subscribe to my channel and the Pivot Trader. And we literally go on Zoom every day. We take the charts, we look at things, we take trades if there's trades to be taken, because it's important to take them live. I think, if you just work on theory, I've seen people they'll only show you their strategies on slides because they don't trade them. So you've got to see them traded and what it really looks like when that on the right-hand side of the chart, when it's actually happening, and how, for some people, it's quite scary. Me, I enjoy it. It's quite a nice bit of feedback, because you get people hopefully getting successful, more successful doing it. So that's my sort of morning. My afternoons, as I say, I'm testing. I'm doing some recording, and I put a load of stuff onto YouTube as well. The day goes past so quickly, and as I say, got those 2 major windows to be trading through. So I trade a little bit of someone else's money, but I'm not out there to look to trade major money. Maybe I might change that at some point when the children go to university. But at the moment, I'm quite happy where I am with trading myself. I don't have the phone calls of people saying, hang on, it moved a little bit down the other day. They never ring you up when it's going up. But the guys I trade for, they've got absolutely, I don't speak to them for months on end. And that's why I like it.
Yeah. And so it's interesting. I spoke to a guy last night, or trader last night, who's going to be on the show. I don't know if it's going to be before or after you, but they said exactly what you're doing was the solution, i.e., having a mentor that you can actually sit there and watch them take the trades and watch them at the charts. It seems to be much more advantageous versus, here's how you do it and good luck with good luck with that.
He knows what he's talking about, I can tell you. Because it is. I mean, when I started trading options and covered calls and things like this, I did this course, and it's was it Wealth Mastery or something like this? It was called, and I did it, but at the end of the day, I came around with it. I've still got the book somewhere because it's a massive folder. And I, like everyone else, I've probably still got it and never referred back to it ever again. You start trying to work out, well, how does that work? And fortunately, I come across a guy. He was trying to get a bit of a trading company going himself, as in teaching people, whatever else. The trouble is, he was never very successful with his trading company, but he was a really good teacher, and he really knew options and what we were trying to achieve, and showed us, and literally showed us live. And this is what you do, and this is how you place it, right? This is what we're doing, and it was so easy to learn, and that sort of made me think, well, there's no point just putting stuff up on YouTube. I mean, I put stuff on YouTube, and hopefully it gives people ideas to take away and test and try for themselves, but there's nothing that beats just literally sitting there looking at screens. And the biggest thing is when you can't get a trade, because everyone's looking at you, they probably are looking at me actually, and thinking, why hasn't he taken a trade? Because the market isn't offering me anything. I've got the patience. I don't particularly want to sit there and just take a trade to show you how to take a trade. I'm looking to take a trade because, look, we can see this is a good strategy here. This makes sense. It's got X, Y, Z going for it. There's the risk. There's the reward. It's paying its way. Let's go ahead with it. And if it doesn't, I mean, I couldn't get a trade this morning, and so sometimes I almost feel like, in a sense, that you're fouling the guys that are coming into the room, but at the same time, it's making them aware you don't have to be. Cash is a position, you don't have to be in the market all of the time, and I don't know. This year, actually, I mean, I keep a record of the trades I've taken in the trading room separately. So I've got a list of where we are over the year since I started the pivot trade in March last year. And so I keep a running total of what's going on. I look at the drawdown and everything else that we've got. So I've actually done a sort of full analysis for them, which I share with them, and we sort of run through. And it's doing okay, but I try and encourage them to do all the same thing, so that they know there's times that I may get a break-even trade, I may never even get a trade, and hopefully it encourages them to realize you can do okay, not trading every day or every session of the day. You can, It's a long journey. It's not like a race, a sprint. It's a real journey to be trading. And if you're looking at sort of 20, 30% over a year, I don't think enough people realize that's a blinking good return. I look at what the Berkshire hedge, Barclays hedge shows in terms of Forex traders. I think it's 9% they did last year. And these are so-called professional traders. So hedge funds, etc. And you just think, well, if you can outperform that, they've probably got some of the inside information, if there is such. Well, there is information, but they may have better information, but they're still not really knocking it out of the park that much.
Now, let's dive into. I mean, I've got a ton of questions on what you've mentioned, but we're going to try and keep the flow and dive into that analysis that you talked about with, you're keeping a track record of, here's what we've done this year, students. What's that look like from a stats point of view, if you wanted to just sort of reel those out? I mean, how many wins? What's the sort of risk to reward kind of thing on the trades?
Okay, now the risk rewards, I'm let me just move it over so I can see it as I'm talking to you a little bit better. I'm not I take what's on the table effectively. I use pivot analysis a lot, which I will show you. But it's so I'll take what's there, not what I want to have. Basically, in a sense, I'd like them all to be 10 to 1. But the reality of these markets is, as long as you can cover your costs and your strategy has a bullish bias, you can make money. I actually did a lot of analysis on, I've got a particular strategy that I've done stacks of analysis on, and it does like 20-30% a year. With one, well, now it's down to one currency pair, because I had 3 currency pairs on there, but the 2 on the periphery were basically taking away from it as opposed to adding to it so often. It's a great exercise, been trading it over a number of years and kept all the data on it. And it's the whole process is a massive learning process, because you understand you can have 7, 8, 9 losses in a row on some of these things. It's one strategy, and that's how it goes. But then all of a sudden, it absolutely flies. But coming back to the risk reward, the optimum risk reward was 1.3. Now, I looked at all of the figures, and I thought, well, I want to automate this, so I've automated it. It's on a little EA, but because it's easier. It's an easy way if you're not sitting at the screen all day. And I was out today. Okay, I switched it off today because there was so many speakers coming out today. So there'll be days I make a decision where I'm not going to trade. I'm have it on that day.
Yeah.
Yesterday I had it on. Yesterday, yeah, I had it on, and then today I turned it off. Yesterday it actually hit me. A confession, I had the timing misset on the auto trader, and it took me a 7 o'clock trade, which I'll never ever take. I'm an 8 o'clock starter. It took me, I had 2 winning trades off it yesterday because of that 7 o'clock one. But I've adjusted the time now, but it just does itself, and I get little pings on my phone because it's using MT4, although you can't do it through Apple at the moment, but you can get it to send you messages anyway. So,
tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot. So you're looking at like your risk to rewards 1 to 1.3 on average. That would be the optimal. Yeah, that would be the optimal.
That's all one strategy. On different strategies, as I say, it depends on the strategy, because some of these things, if I'm looking for somewhat more of a swing, I'm looking for 2 or 3 multiple, 2 or 3, hopefully. But as I say, it depends on what's really there. I've moved probably most of the trades I've had recently have been day trades, because the way the markets have been moving, there's a couple of them will run overnight, but majority of them are day trades. But if you counted them in pips, you'd think, oh, that's really good. But in percentage terms, because and that, again, it's a strong belief I have. You count in pips, and you can mislead everyone by saying, well, the system's done 1,000 pips, and realistically, it's probably done 4%, because the amount of risk that you put on the other side of those, what you gained was just didn't make sense. So I just look at risk and reward. I measure everything, and so I look at multiples of that. I mean, some of my returns have been like 0.6 for whatever it may be. I may have been trailing the stop on it or something like this. So they look quite ugly at times, because I'm moving things, but I'm not. I'm only moving things in alignment with my strategy. The thing with trading with and I mean, I'm just looking more recently. I've sort of had 1.4, 1.5, 1.86, 1.86, 1.9, and 1.2, 1.5, 1.2. It's a lot of 1.2s. 1.6 on Monday. Lost 0.5% yesterday. So my biggest loss is only ever going to be 1%. I never risk more than 1%. That is absolute. And I came back after Christmas, and I only, for the first week or so, I was on 0.5% risk. Because it's such a horrible time. I'm just, looking back historically at my own figures, and I just think, why don't I have an extra week's holiday?
Right. Okay.
It's like September. It's just sort of I sort of go away in August. This August was pretty good, and I should really go away in September. September's not as good as August. August is actually hanging in there and not doing so bad. So.
Oh, that's interesting. And so
it
how many strategies
variable.
how many strategies do you actually run?
I probably about 4 or 5. I've sort of got one completely fixed strategy. The rest are, I'm doing my best to make them as mechanical as possible, because I read price at the end of the day, and the entry of getting into a price is done by what I'm reading. So I have to teach people how to read the price and what you're looking for. So it's some of them are very, very like flags. I really love flags if they're in trend. I mean, it's one of the people say, why do you trade flags, whatever else? They're brilliant if you get them right. But I'm using them with pivots, so I've got this overlap. So I'm using a lot of pivots as my sort of background tool, and then I've got 3 or 4 pivot strategies that run around that. So I can, yeah, but they're just different opportunities that you can use pivots for. So there's great stats around pivots, and they're very easy to measure and get good. You know, I know the probability of just about everything happening with a pivot in any given day. So I say in every given day, I know the long-term probability of the pivots being hit. Yeah, and the chances, I mean, if you look at the R1s, R3s, S3s, if you're into pivots, and you look at those, they've only got like a 5% chance of it ever being hit. So if you're setting targets outside of those in a day and you're looking at it as a day trade, you haven't really got a lot of chance. You know, you've got a 5% chance. So a lot of my strategies are applied around knowing what the market may deliver. I think any fool can take a trade and get into a trade. But the great thing is getting out of the trade, and getting out of the trade in a way that you don't want to be leaving loads back, but you don't need to be coming, if you're shorting, you don't need to be coming out the bottom. If you're going long, you don't need to be coming at the top. You need a point where it's completely logical. And if it's a previous high, previous low, a pivot, or whatever it may be, I think traders need to sort of wake up and sort of think, well, it's not because I want it to go to the moon and I have this idea that it's going to go and go and go. I've got to have a reason to work for whatever I'm trading to target specifically, because I think that traders spend a lot of time learning strategies and everything else, but they never really learn the art of exiting the trade.
Yeah. That it is a big art, isn't it? It is a big art. Yeah. Now, so you said you created an EA based on one of your strategies. Was there a particular reason you chose that strategy to automate?
Yep, it's based on some candles and one moving average. It is the most simple thing ever. The signal comes up quite frequently. I only use it as a continuation pattern, as opposed to, I mean, some of the most major tops and bottoms, the signal comes in, but I'm not really I'm not looking to sell into tops and buy into bottoms. I think, you know, we've got 80% of retail market losing money, and I think a good part of that is that traders are trying to trade clever. They're trying to be clever on a market which is quite obviously sometimes in a downward trend or an upward trend, and yet they want to pick tops and bottoms. They probably started off trading trend and then decided to go for tops and bottoms. And I'm a trend trader. I really like trend, even if I want it really across the time frame. So I like the daily time frame being up, the 4 hourly being up, and then I'm happy to be taking my trades off the hourly time frame. I go down to smaller time frames to get in and more eloquent entry, and just look for the detail below the time frame. But it's really 4 hourly is when I'm entering the trades. And
so this, with that particular strategy where you've automated it, when you automated it, did you go back and test it across historical time and see that even though you'd only started trading it maybe I don't know how many years you'd traded it for, but was it still performing before you manually traded it?
Yeah, it was. I mean, I started trading it back in 2006, but the thing is, I was trading it, and for some reason, I in those days I thought I should look for a fixed point target. So that's one thing I was doing. I was looking. So it became hard, and it worked at that time. It seems to work really well for the euro on a 15-minute chart, and it was giving some really nice. It was like, I remember 20 pip stop, 40 pip target, something like somewhere in that line. how I was trading it at the time, and it looked really, really good. And it worked for a while. It worked for a decent while when the markets were the markets were quite volatile, but it worked pretty well on that basis. However, the average true range of the euro came down to 45 pips. And there's me looking for 40 pips and 45 pips full day, and you've still got to get in the trade and out of the trade. And it wasn't really working. Even rolling over to the next day or so, the markets were just too choppy. And it just got so consolidated, it killed it. So I left it alone. But then I looked at it because the pattern is brilliant. A little 3-bar pattern. It is just so silly that it works, but it works. And I looked at it again, and I thought there must be a different way of deciding on when to trade it, and also deciding on what sort of target is suitable. And I literally, once I cracked that, so I had a little formula which gives me the target, and I back tested it. I went years back. I went 5 years back. Actually physically testing it. So, it was a case of, it works. and I'd seen the figures, and there was really horrible times during those 5 years, and there was really good times. And as I said, it comes back to the mindset in terms of we don't program ourselves to understand what really could go on. Someone would tell us, it's got a 60% win rate, but over time it can have a 60% win rate. But at any given time, it may have a 90% losing rate in that little picture. Yeah. And crikey, that's squeaky bum time in real terms, and people give up with it. And we did. It was 1921. Yeah, I can remember the days. Yeah. In 2021, not that old. 2021, it had a poor old year. It sort of started off okay in January, February, March. In April, it was okay, and then it just really went downward, and it just really had sort of like 3 or 4 months of really desire. To me, it was sort of 6%, 8% down in a month on some of the currencies. And for me, I know it's not very much, but it was in a sense of expectation, I guess. It just hit a bad patch because you start get 14% down. Next thing is you're 20% down or 30% down. You just think that's wrong, but then all of a sudden it started coming back again. I mean, it ended the year 20% up overall, right? But it had a dip. Well, if you'd taken from January right the way through, I was actually measuring it initially from March, but if you to get the 30% down, but the earlier stages, the earlier months in there were pretty decent. So it was running better, but it's with trading a strategy, people are very short-termism, have a very short time frame in which they'll give it any chance. And I think you can use mechanical methods to backtest, and there's a lot of great systems out there which I'm sure would give you certain things. But actually seeing it, I know it takes a lot of time, and that's why I don't get a lot of sleep these days. But if I get into a strategy, all of a sudden I want to just sit there and do it and just look at where this is going and let it. Well, come on, it must have a losing run in the moment. And I mean, I can show you on an Excel. I've got it all done on Excel spreadsheet, everything calculated out. I look at the sort of ratios of win-loss just to see what it's achieving on a regular basis. And you could outperform it to a degree. And I've played take it or leave it with the client, the guys that trade it with me, in terms of I've got loads of pictures of the setup. So would you take this one or leave it? And they all have a guess of whether they'll take or leave it. And probably 70% of the time they're wrong. It would have either gone on to win or lose. And yet, if you sit there and you think, well, I could out-trade this easy. But there are times, like Canadian dollar, I've switched it off at the moment. It's one of the pairs that I was trading with it. I've just switched it off anyway. But I will manually trade the Canadian dollar sometimes when I see the signal coming up on it. But I have really strict time frames when again 8 till 10 o'clock. If it's not set up and running by 10 o'clock, I'm not going to get into it in the morning. Don't care what it does. And again, it's just got these peak periods when it really works the best. And the only way you really find out about that is testing it and going back and looking at it and getting a feel for it and having confidence then, and you just leave it. something a lot of traders can't do, but you've got to just leave it.
And so when you were trading it manually, were you just trading it in that time period, and that's why you came up with that time period?
I only traded it manually after I tested the theory. So then I started switching on manual. Then I found a broker that was absolutely great in terms of it had like an MT4 platform, but they had the benefits of you'd probably get this for MT4 in terms of a timer on it. So if it didn't you could have it all set up that if it didn't trigger in the next hour, it just cancelled the order. I'm sure there must be something for MT4 out there.
I think you can set an expiration on the pending orders. Yeah.
It's normally a day. It's normally a day or something like that. I don't think it's time wise, which is no good. Is no good for me.
No, maybe it.
Yeah, I'm sure you've got me. I'll have to have another look now.
Yeah, I'll have to have a look as well.
I know. I don't set them up because that's automatic. I built that into the EA. I say I built it. I didn't. I paid for some guy to build the EA for me. So that was all done. And I to be fair, I get the pings and I don't even look at the chart. I don't look at it because I just think you start looking at it and you'll want to. I know better,
so man gets
leave it.
So if I've got this right, so you had a manual pattern and a sort of concept, but then you used the bot to find out how to potentially get a better exit for the strategy.
No, I did that. I did that manually.
Manually as well.
Everything was manual. I looked at how far the price moved after the signal came and it triggered. I looked at the potential of movement. I was quite harsh on it because I'm trading my money at the end of the day on this strategy. I don't want to go where it moves 60 pips and then all of a sudden you get all this lovely peak area that's giving you like the optimum is 3 times or something like this. And reality is it's 1.2, 1.3. You've got to be completely honest. It's weird backtesting when you do it for these sort of things because you want them to work. You start doing you get involved in it, and I guess this is one of the mindset things is that you want to sit there and get it to work. I've sat down. I used to have I do a bit of mentoring indoors, and they'd come and see me and sit down. I mean, the great thing about Zoom now, I can mentor God knows how many people at one go in a trading room. It's damn sight cheaper for them and it's easier for me, but I can show them everything. But this particular guy, he wanted to go back and it was an 821 crossover and it was just like he just found gold. And it worked for about 20 trades and he probably had a 70% win rate somewhere in that region. And then the market completely turned and it just went flat, basically. And you're just getting all these crossovers, backwards, forwards, backwards, forwards. It would have been losing a fortune if he'd been trading it. And then he said, well, I'll do this, I'll do that. And I said, but you can't go back and change everything. The thing with testing is you've got to be completely honest with yourself. And you can't go back and just say, well, I've done that because of this. You've got to have it. So I think an EA is a real tester of any strategy because you're then leaving it to run. You can't fiddle with it. It's just run. You can adjust it over time to improve on it because I'm monitoring the results and monitoring what it could have done all of the time to see if I could get more out of it. The volatility is really picking up that much. The only thing is the stop will be picking up as well. So more volatility, it may be instead of having a stop of about 20 points or 20 pips or 30 pips, it may be 50 pips or 60 pips. So in ratio terms, you might not get a lot more out of it. But for the point lovers out there, they'll love it, or pip lovers, because they'll say, well, just made 80 pips on a trade.
Exactly.
I risked 70 to get it, but I got 80.
Now I read in your bio that you were sort of like the stat god around, you've got stats.
I did not say God.
Well, no, maybe you didn't say that. I just said that. But you've done a lot of work on working out the stats behind certain signals happening and the success rate of those. Are you able to share some of the insights you found?
I mean, the stats, I'll certainly share some pivot stats because I think they're probably, if you're using pivot points and if you never put them on a chart, just go and put a basic floor pivot on your chart, your favorite chart. Now, if you're looking on the data, I'll just give you some, you can set them up that are monthly, weekly, daily, or even down to 4 hours. Some people trade off hourly because they're mad, but I personally, I always have a monthly, a weekly, and a daily pivot showing somewhere on my chart. So I've got one chart showing always the pivot on there. Aside of when I'm back testing my other strategy, in which case I have nothing on there apart from a 34 moving average and price. So it's all done with, that's the way I do that. But with pivots, they're absolutely excellent. If you look at some stats around it, then it's like a bell curve, effectively. If you look down from, I'm only going from R3 to S3. A lot of pivots now will give you 4s and 5s, some of them even 6s. I'm not worried about those because the probability of going beyond an R3 is around about 5%, below S3, around about 5%. So, and that's pretty similar across the timeframes from daily upwards. It's different for a 4-hourly pivot because the extra volatility, it changes the flow a little bit there. But for dailies, weekly, monthly pivots, you've got at the moment with the euro dollar, for example, you've got a 75% chance of the daily, weekly, or monthly pivot being hit. So it's got a high, pretty high probability of being hit. That doesn't mean to say it'll stop there, but it's got a good. So you can use them as targets in that way. The way pivots move, then you've got the R1 and the S1. Then the probabilities of the R1 or the S1 are around about. Actually, I'm saying around about last year on a rolling year here. There's a 40% chance it will hit the R1. This is on the euro, 47% it will hit the S1. But the euro was largely downward trend, so it's no surprise last year it was, it peaked up, but it was going downward, so there's slightly better chance of it running down to the S1. So it's going to hit either the R1 or the S1 75% of the time. 75% of the time it was going to hit either way. It's the same percentage. That's the right reason I looked at. It's the same percentage of whether it just hits the pivot itself. So it's going to hit the R1 or the S1 each day. So if it's hit the daily pivot, then you start getting, I've got a target here of either the R1 or the S1. So you can work on, and you just play with trend then. So a lot of my strategies are built on that. It's very simple realization what's going to be hit here. If you look out to the R2 and the S2, then the probability goes down to 15% and 17%. So the R2s and S2s have less chance of being hit. However, if the main pivot isn't hit and price touches the R1, pulls back and goes through the R1, then you've got a 65% chance of it hitting the R2. So it's easier shown on the chart than it is discussing here, because if I was you, I'd probably go la 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 by now. But it's actually seeing it
makes sense.
Chart.
It makes sense.
It makes a lot more sense. I don't know how many people use pivots, but as I say, I'd strongly put them on there, because all of a sudden you think, oh, that's why it stopped there.
Yeah. Well, the funny thing is, it used to be when I first started doing this stuff and interviewing people were talking about pivots quite a bit, and now never hear anyone talk about pivots. So it's obviously something that's dropped out of favor for whatever reason. But I mean, I haven't looked at them for years. So why on earth did you stumble on them as your sort of core, strategy?
Well, do you know, when I first found them, I didn't really like them that much because I was such a Fibonacci fan.
Yeah,
my time of trading. Sorry, it's all going back a step here in terms of I've spent so many years on looking for the Holy Grail. Like any trader that's been out there for a while, some people would just give up very quickly. But you're looking for that thing that's going to give you that bigger edge, and you realize you come to the end game here is. It doesn't need to give you a massive edge. It just needs to give you a relatively consistent edge, and it needs to give you an edge where you can make more money, you're going to lose. That's all you need. Simple as that. But we go out there because we want these 80, 90% strategies, 100%. Ideally, I mean, who would love to have such a strategy? So you go spend it. I spent time running through. I forgot to mention, I used to write a newsletter for one of these trading education companies, and we used to write our own newsletter. That's so much information that I'd gathered. And one thing I did, I started doing some analysis on different indicators and what they are, how they work. Because again, we tend to overlook what we're using, and most of these indicators are completely lagging. The thing with pivots is they worked on a lag basis, but they give you a forward shot of what might happen in the day.
Yeah.
Whereas most things, they're only reacting to price that's arguably pivots having the calculation, but then they stay still all day. A moving average ironically moves. Well, it's not ironic at all, it does move. So it's moving. So I looked at so many different things. I looked at I got introduced to this guy. He was so interesting, and he did this sort of system which he called a matrix, or the market matrix, and which we looked at, and I just thought, oh, this is brilliant. And it was this sort of like a timing tool where the markets were going to turn. And Wiles Wilder, his name, the chap from RSI fame, he had written a book, or he hadn't written it. It wasn't his work actually, but he put his name to it to because it generated a lot of money. But he put his name to this strategy, this measurement of delta, which is when there's a map of when price action might turn, and you get these little windows of when it might turn. And so you would forever be looking at that. Then we put it together with Elliott waves and Fibonacci. And it gave you a full matrix and looked at, instead of just looking at price levels and highs and lows and things, we looked at time as well. Anyway, that was a long 2 years that never really came off too much, because I realized the guy that was working with it, I mean, he was just a blinking good trader. And the only reason he was a good trader is because he read price. However it was, he would look at price, and he read price. He wasn't using all this market matrix stuff. He was actually just reading the price, because he'd always have an excuse of why he's just done this and why he's done that, and all he was doing is reading the price. And it's one of the moral of the story is just learn how to read price. And I can show you how to trade literally without anything else but price. And I do this at any time. I don't care. People can come into my room free of charge for a day or two, and I'll show them how to read price. And you can see how you could make money just by reading price action. Put pivots on there in price, and it's an absolute dream for me, because I can give you I know the stats behind the pivots, and I can see the price action, and all of a sudden I've got an edge in that market. And I know that edge is going to work a good percentage of the time. And a good percentage may be 60, 65%. But that's good enough for me.
I like that. I should actually bring up the pivots again, I think, myself, and just have a look at where they are in conjunction to what I'm doing, because it's definitely gives you an edge, right? If you know that that's a point that you could take profit, and it's not going to move.
An interesting thing is, not a lot of people do this. I'm saying interesting, it is for me, because I'm bit stat driven, probably because my mindset is risk. I don't like risk, so if I can work out the stats, I say don't like risk. I like risk, but the right sort of risk. So I want it to be on my favor. So I just work out the stats. I've shown people it before who are pretty good traders. I know they're pretty good traders, and say, why don't you put the pivot on there and see what it is? And I then give them the stats. He said, well, I didn't know that. If that would have made a difference. And it's sort of, you don't want to stifle your trading, and a bit of common sense is needed with them in a sense, but common sense is only learned in the case of trading, but it will come. You'll just pick it up. Oh, that's going to, for example, the chances that if an R2 or an S2 only have a 20%, let's just say 20% chance of being hit, why would you ever target them? However, if it hasn't hit the pivot and it's run up to the R1, pulled back and pushing back the next time, it's got a 65% chance of being hit, purely because the price, if you can imagine it, the price must be in a trend, in a quite strong one. It's not gotten anywhere near its pivot. It's time to, I'll play it up to the R2. The other thing with pivots, you've got to be careful. If they do get very pinched, I mean, today's pivots were yesterday's were particularly pinched. Today's were relatively pinched. So then you've got to, again, I suppose
there's not a lot of room to
common sense, but a bit of sense has got to be taken to, the R2s and the S2s maybe hit today. And some days that you get a big movement like Friday, and then you get the pivot the next day, Monday, and they're sort of a country mile away, and then you've got to look at the midpoints. When we had all that volatility between 2008, 7 and 8, 9, when the banks were all crashing, I used to use midpoints on there as well, because it wouldn't get to, it run out of legs, even how volatile the markets were then. It just ran out of legs before it gets to some of the targets. So I used the midpoints.
Interesting.
But okay, I knocked them on the head lately.
Right. Well, let's dive into some more of these questions. So what about if you're going to recommend a step-by-step approach for somebody coming new into trading, what would it be?
Firstly, learn how to read price. Without anything else on your charts, just learn how to read price if you're going to do that. And then it sort of really build things up. Stay with trends. Always just look at trends. You don't need to be the top and bottom man. Was it Jesse Livermore? It's the Confessions of a Stock Operator. You read his book, he suddenly sussed out that trying to get tops and bottoms, which he was particularly good at doing at times, but not regularly enough. He went from boom to bust so many times. And so it's not the place. The chunk in the middle is just as good. If you can get some idea of wave theory, basic wave theory, 1, 2, 3. You can count to 3. You can sort of work out, well, the third wave's the biggest wave, and so if you're in a trend and it's sort of you're in this sort of third wave, it's got a bit more to go, possibly, statistically, of course. Make sure you're doing that. I mean, make sure you've got an account that's funded. And there's little point actually, apart from learning how to use the brokerage you're using, actually using paper trading. I know a lot of people say you've got to paper trade first. You'll only ever be guessing with brokers. Don't care about their paper trading guys in terms of if there's a bit of slippage. They're not going to slip your trade because it's paper at the end of the paper money. It's not going to get slipped. It's very unlikely to get slipped unless they're using the feed from the live markets and whatever else and filling you at those. So you're getting like a false security. And you haven't got the mindset, you haven't got the fear factor. A good guy in our training room at the moment, I'm actually mentoring him because he's a good IT guy and he's I'd say a media guy, and he's doing some of my media stuff for me in return. But he went over from doing he did a challenge which on was it FOMO or whatever it is, that I don't know what it is. That's fear of missing out. That's not that one. FTMO. Yeah. He did that challenge and he did pretty well on it, and it's all paper. He did blow it the next after he passed the challenge. He then carried on trading and blew it on the next day. Hope he never listens to this. Right. I just confessed for him. He blew it on the next day and he broke the rules. But then he went from trading like this. He had been trading in the past. He'd been a crypto trader, so he's gone the other way. He's seen the light. Anyway, he's now moved. He's got a sizable account and he's gone to cash. And now he's noticing the difference of trading between paper and cash and how significant it is, particularly with letting the trades run and walking away from the charts, because he almost can't do it. So if you start off in good practice and actual running with real money, but don't risk any. Again, learn risk, understand risk. Sorry, you're getting me to start reeling these up. Probably not in the right order. Must understand risk. Don't risk any more than 1% account. Don't care how big the account is. If it doesn't fit in and the trade needs 2% or 3% to trade it, if you're starting off, leave it. You can't take that trade. It's too rich for you, Sonny. Or be realistic. You're
Find another market.
Find another market, find another opportunity. Just wait, pick your fight with where if it looks ugly, it's ugly. Leave it alone. Find something that looks nice. And I look all the major currencies and the cross pairs of those majors. So, and that's my world, because I use a broker that's got very, very tight spreads for me, makes rates almost. And I can get I'm straight into the market. It's a direct access, a genuine direct access market broker, I would say, as opposed to a lot of these that just match you and stuff. It's just done, and it's there in the deep pool liquidity. So just ensure that you're as I say, managing risk. 1% is absolute tops, and it may be when you're starting off with cash, you go with 0.5%. There's nothing wrong with starting off and then gradually building on it.
That's
but if you can just start off with one, and you'll find that the power of compounding, and just use a little formula, use the there's plenty of little
tools and stuff
tools
that you can get,
to make sure you got the right size position, etc. on there. You may find that you're slightly under, if you don't, always go slightly under rather than slightly over, because otherwise you get in the habit of going too big. And just stick with it. Look at your risk. Risk is absolutely all you're managing. If you can manage your risk, then the bottom line starts looking after itself. You understand what you're looking at.
Now one of the things you mentioned there,
get too hung up on ratios of like looking for only 2 to 1. I used to, and 3 to 1 and 4 to 1. You'll soon find out as a beginner it's harder to exit a trade than it is to get in. As I said earlier, deciding on where your targets are is part of what you've got to be learning at an early stage. And again, reading markets, maybe looking for previous highs and lows and things like this may be an easy way to address that. But you've got to work out a way of how you're going to exit that market.
Yeah, because so you mentioned at the start there, like reading price, and I think that sort of come across as, this other guy who just he actually reads price. He doesn't have this, he doesn't use all these other things he's teaching, but he reads the price. What sort of, if you had to say 3 things, here are 3 things you can go away and study over the next month to understand price better, what would they be?
Well, it's start it. You can start off with the price action itself. I use candlesticks, so you could, but it's just easier to see what the prices are doing. The individual candles will give you a clue. Now, if you're a nervous ninny, you can always change to Heiken Ashi candles, and they're brilliant. You might want to look at those because they'll keep you in trends longer than you ever thought you could keep into a trend, because they average the price over a period. But if it's absolutely an earlier start, I would just start off looking for lower highs, lower lows, higher lows, and higher highs, and that will give you a picture of trend. But look from higher time frames down to the lower time frames. So you always you want to be with the trend. And if you're looking off let's say you're trading off an hourly time frame, quite often it's good to come down to the lower time frame, 15-minute time frame, for example, or even 5. But 15 is a brilliant time frame to come down to. And you might find even easier ways to get into something that you're looking at in the higher time frames that might be giving you something that you think, oh, this looks okay. If you go down a time frame, you say, oh, hang on a minute, no, I'm not trading that yet. It's quite a bearish little signal with the candles. It just isn't looking right. But so I think that's 3 things.
Yeah, that's 3 things. Now, what about, you've had a lot of students come through. I'm sure you've seen all sorts of different mindset issues pop up with students. What are your sort of hacks, tips, tricks that you share to get people on the right track?
Well, I think the easiest thing is we've got so much technology these days, and as I dwell back to they weren't necessarily good old days in terms of technology, but these days we've got alerts, we've got all the orders under the sun that you can want to that will take profits. You can buy stops, sell stops, every other order that you can particularly buy limits, sell limits. You've got plenty of tools there to place the trade or place the setup for the trade. You can put your target in. You can put every part of the trade in there. Walk away. Go do something. Go do the garden. Walk the dog. Do something completely different. Don't look at that computer until you hear a ping somewhere that it's close to trade. That's the best mindset, because then you won't fiddle with it. Because even I look at charts sometimes and I come back and I can find an excuse to exit anything. After years and years of trading, I'm trading for, I want to see how far it goes and what I actually get out of it, because I can't report it to the guys if I hadn't left it run. So it's great. So it's like having another mentor there that I have to confess to them when I'm closing it, buying it, or whatever I'm doing. It all gets reported to them. So it's like having a third party. Maybe that's part of it, is that you have someone that you speak to and say, this is what I've done. this trade I'm in, this is my target, and then tell them what you actually come out at and how it turned up. And when you got to report back to someone, it may just make you stay in things longer. But if you're not there in the first place looking at it, you ain't going to be fiddling with it, because you can't. Well, you can if you go on your phone, but don't take your phone.
Yes, exactly. Okay, so really the long and the short of it is just do your analysis, make your decision, and somehow get off all the technology that can give you access to that information of where the price is currently at.
Well, we just get on with things. Yeah. I mean, get on with back. I mean, I literally, when I get into a trade in the trading room, the worst thing is, and I ban anyone talking about if the trade's doing good, because that is almost like a death kill for it. If someone says, what we were trading the other day, it was the Aussie CAD we traded on Monday. And someone said, that's going well. And I said, you just can't do that, because it might, it'll probably turn now. And it turned almost like straight away. As they said, it started moving back up again. It went down to win, but it was just that sort of, you don't want to be looking at it because people want an excuse to exit or lock in money, particularly in the earlier stages. It's particularly if they've had a few losses. If they've been fortunate and had a number of wins, and it's sort of done, and they've been winging it or whatever they've done, they'll then get over bullshit and think, well, I'll let everything run and it'll go for miles. But it inevitably happens that people just look for a reason to exit the trade, as opposed to trade, using the stats that, if I know I've got an R1 that's above previous highs, okay, I don't ever take an R1 or an S1 as an absolute target. I allow a few pips, 3 or 4 pips, just so that the spread and everything else is there, because it might hit the pivot and your spread hasn't quite caught it.
Yeah.
You're trading some of the outlandish pairs, but you just leave it. Just walk away. Do something else. Back test. Look at different charts. Anything.
Ironically, it's the whole purpose of trading, isn't it? To get the time back. So if that's the time that you've got back. Hey, look, we're going to dive into the quick fire round here, and then wrap this baby up, and we'll jump into a chart afterwards and get to see what you know. So how long did it take you to go from newbie to consistently profitable in Forex trading?
In Forex trading, because I had the experience beforehand, it was sort of like just an add-on. But I had probably periods when I was doing particularly well, then periods and I wasn't doing so well for, so it took a long time to realize it's a long-term game. So because I was measuring myself on too short a period, months as opposed to weeks and months. And then I realized that you should really be looking at your result over a year and what you're doing over a year. So I probably hammered myself in terms of early stages. Probably took about 3 years to really get into a rhythm of not being overly worried and hung up about a month's trading. We're going to have losing months, but it happens. You almost don't want to admit to the fact that you have losing months because you're a professional trader, but it happens. That's trading. Probably about 3 years of actually, but I had peaks and troughs all the way through it. So it's sort of I never gave back more than I had, and I made money over the 3 years, but it wasn't as consistent.
What's your favorite entry setup?
Sorry?
Your favorite entry setup?
I'd say, a flag with pivots involved. Simple as that. And when I show you on the pivots in a moment, I'll just show you some of the very simple processes that I just follow. But it's something I do like flags. Weirdly enough, they seem to work pretty well. If I've got a pivot target for it, that would be it. Otherwise, obviously the automated trade, I call it an AB3. It's a 3 candlestick signal with some know-how that goes through it, some trend, and that's it. So I've got 2 there now. Sorry,
that's all right. What about the method you use to exit or manage trades?
That's as on the auto trader, it's done on a ratio. Otherwise, it'll probably be pivots. If it's a day, well, even on a weekly basis, I'll be looking at pivots so often for the weekly or monthly. I'll have a target, and that's what it'll be. Prior highs and prior lows often make a bit of sense, but not always. I can look at the order book to see what lies above. So if there's a load of buy orders above there, I'll just run it out.
What's your preferred recommended trading book or resource?
Do you know? I saw you give me this thing. Read this old book. It's called The Diary of a Professional Commodity Trader. Okay. Peter Brandt. Okay. For a professional trader, you probably wouldn't read it too much, and he says that in a very few pages. He said, "What are you reading this for?" But for someone told me about the book, and do you know, I read it, and he's the most modest guy going, and he made money year on year on year on year trading commodities. But he was using what I liked about it is he does what I'm doing. You know, he's using straightforward old patterns, and you know, these things that these so-called gurus they say don't work anymore, a load of rubbish. He uses those. He uses cups and handles, and I laugh when I see someone talk about a cup and handle or head and shoulders and things like this. But that's what he was trading with, and he goes through his diary of trades that he took, and when you see how he's just so honest, and I just love his honesty in the book. And he laughs at these people, and I've always done it. I've always found it strange that people need to go and prove themselves and take 10 grand and make it 50 grand or 100 grand or whatever else. It's good, don't get me wrong, but they're most likely breaking rules mostly through that. So for the Joe public, they think that's an achievable thing to do every year. So I've got my 10 grand, I'm going to make 50 grand this year, and of course they end up with 2 grand. The net 2 grand.
Okay, what's your preferred broker and trading platform?
I use LMAX, which for a broker, because it's straight for. I mean, it's literally it's a professional account. They don't like you really trading less than 10K through them, so they're sort of you could have a bit of size for it. It's the platform is quite ugly and old and clunky. I tend to use the MT4 as well as, but I like MT4. I find it really easy to do things on quite often. They're LMAX's main platform. I sort of like it, but you can't hedge on it. You just literally either in or out of a trade. If you close, it's quite handy if you just want to close part positions and things. You can just put a load of orders in there and it'll close them for you partly. But it's a bit antiquated, but it's really for a professional trade that's just trading in one direction, probably, as I see it. But you can put decent size through them, very big size through them if you want, and it's just whooshed away and very, very cheap.
Hey folks, ever wonder what broker I use? Well, I use HankoTrade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining HankoTrade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. Awesome. Now, last question here. If you could leave our listeners with one piece of advice, what would it be?
Truth. Read price. Learn to read price and stay on the trend.
Okay, so go back and listen to what Kim said before around reading price. Before we wrap up, what's the best way for traders to get hold of you?
Through my website, thepivottrader.com. There's details on there. I do have a Telegram. I've now got Discord as well. I've got everything now, by the looks of things. But I've got a free Telegram account. But you can get the details off the website anyway. To contact us, it's all on there on thepivottrader.com.
Brilliant. Well, look, a big thank you to Kim for sharing with us today. Everything we've discussed here are in the show notes on tradingnut.com. Just search for Kim, KYM, in the search box. And until next time, I wish all my listeners trading happiness and success. All right, folks, hope you enjoyed that episode with Kim Watson. Now, do remember we shot a video afterwards, so if you're not on the YouTube channel, or even if you are, jump over there, check it out. He breaks down pivot points and the probabilities of hitting each point. So please go and check this out. This is well worth your time. Other things going on here at Trading Nut, we've got the Fidel Crest 50K challenge. If you do want to take part in being on the Trading Nut live stream and go through this whole challenge process, then there's an opportunity for you. There's an entry form link below the video or in the podcast description. Go and check it out. I'd love to see you on here on Trading Nut in the future. All right, folks, thanks for watching or listening wherever you are, and we'll see you in the next episode soon.